Alright folks, let's dive right into the long-awaited September PC data and see how things really stacked up. First, the takeaway, inflation is moderating, but the job market is softening again. A rate cut next week is pretty much a done deal. And guess what? The stock market liked the news too. The S&P 500 is once again flirting with record highs. So why's that? Well, let's start with the PCE, Chairman Powell's favorite inflation gauge. If you strip out food and energy, which tend to bounce around, the core PCE rose 0.2% month-over-month in September. Year-over-year, it came in at 2.8%, just below expectations and the previous reading of 2.9%. As for the overall PCE, it's holding steady, up 0.3% for the month and also 2.8% year-over-year. Now, about those tariffs, are they showing up in prices? Yes, they are. Goods prices rose 0.5% month-over-month, with energy jumping even more, up 1.7%. So, how are people feeling about all this? According to the University of Michigan survey, consumer sentiment actually improved in early December, climbing to 53.3, better than expected. The biggest boost came from younger adults. But here's the catch, personal financial expectations have dropped nearly 12% since the start of the year. What does that tell us? Sentiment might be picking up a bit, but wallets are still under pressure. What's Wall Street saying? A vice president at Micro Advisors noted that this data all but confirms a rate cut next week. Some are even thinking that if inflation stays contained and continues cooling, another cut early next year could be on the table. Will this give the year-end rally a boost? Not necessarily, in his view. Markets could climb steadily or swing back and forth. Still, he remains optimistic that U.S. stocks have room to reach new highs. The market's rate watch tool now shows an 87% probability of a cut next Wednesday. Financials stand to benefit from lower rates, and bank stocks are already celebrating. Goldman Sachs hit an all-time high since its 1999 IPO, and Bank of America reached its highest level since 2006. And what about the retail investors? The American Association of Individual Investors runs a weekly survey, and the latest shows bullish sentiment at 44%, above the historical average of 37.5%. Bearish sentiment sits at 30%, the lowest since January last year. So it looks like the small investors are feeling pretty upbeat. Finally, let's wrap up the week. All major indexes closed higher. The Russell 2000, which tracks small-cap stocks, gained about 1%. And behind me, that's the NYSE's official Christmas tree, lit up just yesterday. Beautiful, isn't it? You can even see my breath, it's freezing here at the NYSE, -7 degrees Celsius. So hit that subscribe button, give this a thumbs up, today, I could really use your support.